All right, good morning, everyone. It is 8:45 in the morning of May the 5th, 2021, and this is my morning strategy session. So first up, we've got HAYW. News on HAYW is Holdings Q1 net loss narrows, revenue gains. So I haven't dug into the fundamentals. The news is good enough for me. The price action is good enough for me. So I'm looking for a pullback between $21.03 and $20.52 for a bounce. What's kind of nice about today is there are a lot of stocks gapping up. The stock market, the broader index, I'll show that later, is moving up after yesterday's dip. We'll see if we can get below 18.2 on the VIX. But anyway, for this stock, I feel safe about putting these orders in pre-market for the market open. Looking for some profit taking right off the bat. This is a 12.38% boost in price. And so if there are people who, were trading this or, looking for a good spot to take profits, the market open will probably be a good place to do it. And what's nice about, pardon my voice, my 5-year-old and my kindergarten and my preschooler got sick. It seems to be the way it goes is my youngest gets sick, then my oldest gets sick, then my wife gets sick, and then I get sick. I'm always the last one to get it. And so I'm always the last one. I'm always the only one that's sick when everybody else is healthy. And anyway, all right. So what's nice is if this stock doesn't come down into its support levels and I don't get an entry, there are a lot of other things to watch today for entries. So I don't have to, the fear of missing out is always a struggle now, no matter how long I've been doing this. It's gotten easier to deal with. I don't feel the fear of missing out like I did when I first started. Now, the biggest thing that I have to worry about is the golden touch. So I get scared when I'm getting too confident. It's like, oh, everything I pick, goes up. Everything, all of my strategies work because I'm so great and awesome. That's when things get dangerous for me. I don't really feel the fear of missing out too often. But what's nice about having a few things on watch is that one of these things is going to work. Most likely one of these things is going to work, and I'm going to get into a profitable trade. All right. So enough of that. 2103, 20.76, and 20.52 are the prices I'm looking at for a bounce on HAYW if it goes down that far. Next up is AYX. The news on this one is okay. Also, AYX net loss narrows, sales also top street view. Sets mixed guidance for Q2 21. So on this one, if we look at the daily here, it's not looking so great for this stock. It did definitely bounce up quite a bit from yesterday's low, but what we've got here is a rather significant area of consolidation after a down move, and usually these things resolve themselves to further down movement. So, what happens from day to day is anyone's guess, of course, right? So I'm looking for a bounce today. Longer term, I don't know. Will today be the day that it turns and starts to tank, or will today be the day that it turns and starts to move up again? I really don't know. You can see we're down at some support levels here. No head and shoulders here though. I guess perhaps Well, anyway, looking for a bounce, and my levels are $80.84, $80.07, and $79.38. All right. Caesars. Now, this is kind of a reopen. Yeah. So they reported earnings or losses in this matter. Caesars Entertainment reports quarterly loss per share of $2.03. Now, I guess that was better than expected for the bid that it's catching this morning. And it has, as of right now, it has almost 17,000 shares traded pre-market. So, yeah, my price levels on this one, $100.44, $99.59, and $98.83. Now, LYFT just went through my levels. We'll go take a look at that here real quick. Okay. All right. So we have about 40 minutes to the bell. So the levels that I have on LYFT are $58.43, $58.02, and $57.66. Now, if the price opens below, that takes my strategy off the board. If I'm going to be bullish on this, it takes my strategy off the board. These levels right here are support levels. So if the price opens above my support levels, it'll come down into support and move away. That's the strategy, at least. However, if the price opens below my support levels, those support levels become resistance. And so it's more likely that it'll come up and move down instead of starting above and moving up. So, if this thing opens up back above 58.43, that will be really strong for the stock. It might be an entry at the open, but I don't know. I mean, I've got another 40 minutes until I get to find out exactly where this stock is going to open, right? All right. Then the momentum plays DPW. I have traded DPW a few times and it's been a while. Let's see. This thing has a history of popping up and then falling back down again. And I've gotten some quick trades off of this thing. There was one time when this thing, let's see, I think that's too far back. Well, this thing took off to like $20 a share or something one time. Where is it? 12, 11. I know I traded this one back here. I put levels on this one over here. It was just up to 10. Yeah, obviously it was just 10. Down day yesterday, it's popping up back above, up 23%. It's on watch. It'll be a momentum strategy if it gives me an entry. The float is kind of high. The shares outstanding are 27.75 million, and the float is 25.7 million. So kind of a large float. I prefer smaller floats. Not really much of a degree of confidence in DPW as momentum goes. It's on watch. If it starts to behave according to momentum rules, then maybe I'll be watching it at the time when it forms a breakout. All right, so let's see, AYX, okay. Now the broader index here, looking at the SPY. If the SPY opened up right now, it would open up 0.36% higher, 0.36% higher than yesterday's close. I'm still quite bullish on the broader index. What I'd like to see is the VIX here. So just in case you're new to the channel and you haven't seen me do this before, this is the gap. These white dotted lines right here, the gap that was created back in February of 2020 after the cerveza sickness plunge took place. It's come back down to almost tested the gap here. Then it got into the gap and ran back up. Then it came down to, this kind of 24 level. It was hanging around there for a while. Then it came back down into the gap again for a little bit and ran up. Came back down into the gap again, ran up. Came back down to into the gap again, ran up. Again, and then ran up, and then again, and it ran up. And then finally, in just this recent history, it consolidated inside of the gap, came down, consolidated inside of the gap, and came down below the gap. Now it's testing the bottom of the gap, and here it broke through the bottom of the gap and tested the top of the gap, and now it's working on its way and going back down to the bottom of the gap. I definitely would like to see confirmed closes below the gap again. It's just an extremely bullish behavior if it does that. So looking at a breakdown below 18.2 today on the VIX to get really bullish on the SPY. And we're really close. Now, actually, we've got some repair work to do on the SPY. And I suppose, that could happen soon if we don't continue making all-time highs and we start rolling over. There's a little bit of a gap here on the SPY chart between 400 and 403. There would be people freaking out. They would be flipping out if the SPY went down to test 400 and came back up. But to put it in perspective, suppose for a moment, let's see, 420, roughly 420 was the high right there, right? Let's see. Yeah, we'll call it 421 maybe. Let's see, high 420.72, all right? So to put some perspective on it, so if it came down 420 minus 400 equals 20, obviously, duh. All right, but then divide that by 420, you're looking at a 5% pull, a 4.7% pullback, to fill this gap and then continue higher. If it happens, I'd like to see it happen sooner rather than later, because if the SPY just kind of keeps rolling up, zooming up to, from bottom left to top right, it's going to be a much greater fall to come back and repair that gap than if it, just goes ahead and does it now, So, we'll see what happens, I'm still really bullish. So this gap might be left behind for a later date for it to come and clean up the chart, come and repair the technicals on the chart. Then it might be a while before this gap gets filled again. So looking for a breakdown below 18.2 on the VIX. I don't foresee there being a reason why it wouldn't. Quantitative easing to the tune of 120 billion dollars a month, and the government, passing stimulus programs left and right and sending cash out to people. Yeah. I don't see any reason for the market to really be under a lot of pressure. A correction, sure, why not? But a reversal and a crash or a bear market, not until easy money goes away. And right now, easy money is the name of the game. All right, everybody. Good luck out there today. Keep your risk tight. Click like, share, subscribe, leave a comment, and I will see you at the recap. I am out.